So good morning, everyone, and welcome to what is the first broadcast of 2022. It's hard to believe, John, that we started these now back in 2020, just as the pandemic, as it became known, started. And here we are, coming up on almost 2 years later.
It was a temporary solution to the lockdown. So yeah, time flies.
Yeah, fantastic. And the special guest today, Ajay Kapur, delighted you could join us. Hi, Ajay.
Hi, David. Thank you for having me here. It's an opportunity. Thank you.
Yeah, fantastic. Look forward to hearing from you in a little while. So great to see everyone who's managed to join us. A fantastic turnout for the very first one. Just by way of housekeeping, just so everyone's aware, if anyone's sort of new to our broadcast, this is designed to be around 30 minutes long. We normally do a quick overview of the market. We always have a special guest or a special topic, just from an educational point of view and an update point of view. If there are some particular projects on our platform that we want to talk about, then we mention those. But it's all about providing education. So for those that don't know me, I'm David Johnson. I'm the CEO of LEOcrowdfunding. We're an equity property crowdfunding platform based in London. And my co-host, Mr. John Corey, I'll let him introduce himself and his background.
Good day, everyone. John Corey, tech guy from way back, Silicon Valley, right after university. Started also what I call real estate investing or property investing by buying a property about 18 months after moving to Silicon Valley. So I was 25 maybe at the time. And these days, US, UK, landlord, a bit lazy, so I'm buy and hold. I'm not sort of the type that wants to be constantly buying and selling and playing the long game. And that also includes when it comes to investing presently through crowdfunding, because then deals come to me, I get to look at them, I get to make a decision and make an investment, and other people can run those projects.
Fantastic. Thank you. And we've said there that we've been running these now for coming up here 2 years in March, and certainly had a lot of really good feedback from people just in terms of jumping on for a brief shot on the arm, if you like, to use that analogy around the COVID situation, just of what's going on in property, and pick up a few tips and really just help property professionals keep their ear to the ground. And I chose the first slide that we had there. Obviously 21, 22, 23 are on this journey into the future. Everyone's on their own journey. Everyone's looking to achieve what they want to achieve. And if we can help people along the way, then we're very pleased to do that. So how we work today is we always like to have interaction where possible. So please, if you have any questions or comments, then put them into the Q&A. Please don't use the chat box. John and I will monitor the Q&A, and we always really encourage feedback. And when we start talking to Ajay about his journey, then by all means, any questions you have for Ajay, put them into the Q&A, and time permitting, we can put those to him. So we normally do a market update. However, I think the current market updates heading into 2022 are really just probably more fairy stories in some respects, because who knows what's going to happen in 2022. So many experts got it wrong when it came to 2020 and 2021. There's doom and gloom and crisis, and yet the market went a different direction than probably most thought. So I thought what would be better to do in our Ask John session was someone obviously who's very experienced in the market. As I like to joke about, the gray hair rather than the black hair shows that he's been around for a while. He saw the ups, he saw the downs. So John, from your perspective, just high level, what do you feel are the main factors that are perhaps going to impact the property market in the UK in 2022, please?
So something I said quite early in the COVID period was the virus is quite nasty, and yet from a housing point of view, it's not reducing the demand by killing lots of people. There is a certain number of people have died. It's quite tragic for those that's happened to or their families. But when it comes to the macro economy, the demand for housing is the same. The economics of the COVID period has been quite extreme. You know, the budget's gone way out of whack. People have been out of work or on furlough. Some people are making better money. Lots of people are saving money because they don't have travel costs and all that. So quite a few personal demographic impacts, but total demand for housing in the UK is largely the same. One thing people have realized is they can work remotely. So that means people can now move to maybe a place that's better for their family, better to be closer to relatives, and still earn, say, a London salary, but living up in the outer reaches of Scotland or somewhere in Wales or Northern Ireland or whatever, where it's less expensive. Now, the other backdrop that's in the press a lot is inflation is up. And is it a temporary thing or is it a permanent thing? They're starting to say it's factoring through to the service sector, which makes it more permanent. But an interesting point personally was in the US, the inflation rate is saying 7% for last year. That is the highest in 40 years. That literally is essentially just about when I moved to Silicon Valley. And I bought my first house, as I said, about 18 months after that. And I was paying 10.75% interest. And the inflation environment was somewhere near 7%. So returning to a higher inflation, higher interest rate environment could have a big impact on cash flow. Most of the UK, 50% plus, more than half, have no debt on their home. They don't have an interest rate risk when it comes to their home. And those that do have a loan on their home, many don't have a very high loan in their home. So how this all play out is unclear. You have to look at your personal circumstances. What is very true, though, is the course sellers are starting to promote, oh, inflation, oh, this, oh, buy crypto, oh, do this other thing because inflation's out of control. So expect to get sold stuff based on inflation.
No, that's a very good point. I'll ask AJ in a second for any thoughts he has just from his experience. But we talked on your Tuesday event, your property focus event you mentioned, and one of the things that was talked about was for property professionals, volatility, and uncertainty can very often bring opportunity. So if everything was certain, in terms of interest rates and the economy and all the different factors that underpin the housing market, if they were all certain and constant, then there wouldn't be opportunity. But because there is uncertainty, because there is volatility and no one knows the future holds, people then make decisions on what they think might happen, and that has a knock-on effect.
Yeah, definitely. People every day get married, get divorced, they have children, they move house, they change jobs. We're all trying to think about the future and making better choices, and yet stuff happens every day. Same, COVID, whatever. We get blindsided by things every single day, and then we adapt.
Yeah, absolutely. So AJ, any sort of brief opinions from your point of view, or what are you feeling looking out into 2022?
So all I would say is Happy New Year to all of you, and I'm really looking forward to this year. Obviously, there will be challenges, and there have always been challenges. Tell me one year in the last 20 years when we did not have challenges. Yeah, we run these businesses, we do these things, and I'm sure there's a lot of investors and others audience in this session. We all have had our challenges. We look forward to them. That's why we do what we do. We'll deal with them. I'm not going to say it's going to be an easy year. I'm not going to say it's going to be a great year, but I do want to say one thing. This will be pretty much the way it has been the last 10, 15 years. Some things will be good, some things will be bad, and we'll deal with the bad and look forward to the good. Yeah,
excellent. That's a really good, good summary heading out into 2022. So thank you for that, AJ.
Thanks.
So just by way of summary on the platform, and I know we covered some of this on the last broadcast before we finished for Christmas, but as a platform, in terms of the growth we enjoyed in 2021, we have over 1,500 registered investors on the platform. We've had 16 deals funded. We've raised, actually now it's obvious, we're literally 17 at 2.8 million is where we are in terms of deals funded. And you can see the growth from 20 to 2021 was double. So our platform has certainly had a very successful 2021. We're very, very happy with the traction and the trajectory of the business. And we actually have over 300 people who are registered for the broadcast. Now, we don't have that many on every week, of course, but that's the sort of footprint we have in terms of people who have registered for the broadcast, and they might select certain speakers, certain topics in terms of tuning in. But certainly we're very happy with that. And the other thing that's very interesting, John, we have talked about this on the advisory board, is we've now got some really good data in terms of the platform that is interesting. Things like 42% of people who have invested have actually invested more than once, which shows a degree of confidence. And things like average raise, average invested amount, and even the demographics of, it's the 30 to 50-year-olds, make up over about 65% of all our investors, which is quite interesting. So I know you're a sort of stats data man, and it's interesting having these.
Well, I think there's people are on a journey, and there are quite a few people who have invested only once, and then a certain number starting to invest twice, 3 times, 4 times, whether they invest in the same team that they've invested with before, or whether they experiment with other teams and other types of deals. And then we have in the investor category different sub slices of that, and the idea that people who are a retail investor can progress in their knowledge, progress in their experience, so that they can move up to other designations. But this is part of a journey for each person who's on an investment journey. And I personally like it. I'm in one of those slices. We won't go into which one, but it's essentially an easier way for me to look at deals. And whether they're good or bad is up to me and up to the individual deal. But the point is, it's coming to me in a well-prepared format that I can then ask questions about or get my head around and decide if I want to invest.
Mm-hmm. Yeah, and another aspect of our business that has moved forward a lot is this whole education angle. With over 100 pieces of content on our YouTube channel. We've actually spent a little bit of time in December starting to categorize that into certain categories. So you can look at project webinars, you can look at investor project updates, you can look at some of the broadcasts we've done. We're going to have the Ask John section in a separate sort of category. What we do want people to do is, if you haven't already, then please today, call to action today is subscribe for our YouTube channel. You can see the link there. We need to get to 100 subscriptions, which then gives us more scope to do things on our channel. So we're on a big push to get ourselves up to the 100. I think it's at about 75 or 76, I think, at the minute. So if you haven't already, please subscribe, and you can go there and enjoy the content that we have there. Now,
David, can you drop that URL at some point into the chat so people can just click it rather than have to type it all? It's a bit hairy looking at that.
That's a good thing. So if Dal or Tony are on the call, if they could drop it into the chat, that would be beneficial for me. Thank you. Failing that, we can get out on the next email that we send out. So I'm delighted to announce that our first project has successfully paid back. This actually, I think, happened in between Christmas and New Year, if memory serves me right. It seems such a long time ago, even though it's only about 2 weeks ago. So this is the Target 5 project, West Buildings. I'm not going to take any time today on it because Tina is going to be the special guest next week. We're going to run through in more detail this project. But for anyone who's on the broadcast who's invested in this, you've obviously received your initial capital back that purchased a share in the SPV, along with the target return on investment. There's 142,000 odd raised from 27 investors. So we've got 27 happy investors, which is brilliant for the platform.
I was speaking with one of them because I was trading emails with some people over Christmas, and she was an investor in the deal who was happy to be in for the whole term, but said, it's always nice to receive back your capital plus profit, and looking forward to more investments on the platform. Yeah,
and we're going to go into some more detail next week, so I'm not going to take time now. That was sort of the detail of the payout. And for those of you that have an account and did invest in this, you can go to your account on the platform and you can see the full breakdown in terms of what was initially invested and then the payout. So it's all there on the back office. We have a number of projects being prepared for the platform currently at different stages. and so you can keep an eye on the homepage, and you'll be able to see what's coming next. And that brings us on to our special guest. So I'm delighted again to have AJ. I've visited your offices twice now, I think, with Dal, our investment portfolio manager in Stratford. So it was nice meeting you and your staff, and in this current realm of Zoom, death by Zoom, it was nice actually to have two face-to-face meetings and be entertained by you. So I appreciate that. So AJ, first of all, a bit about your background, and obviously then we're going to get into the whole build to rent strategy. So over to you.
Thank you, David. Thank you, everybody. I'll introduce myself first. My name is Ajay Kapur. I am a founder and managing director of PLMD Group. We are pretty much in the build to rent sector. We have been doing this for 20 years now. We have several projects that we have delivered. Initially, we started as a buy to let investors, and we would invest only in buy to let. And lately, we moved into the build to rent sector. I have got a very strong team which supports me in the London office in Stratford, where David has visited us. And I would say it has been an amazing journey so far. And I'm looking forward to the next chapters that we would have in this journey. David, if you could move the slide. Thank you. So, build to rent. I'll just start with saying why build to rent when we were initially doing buy to rent. Build to rent is actually a story that we are forming with the team that you see on the slide on the left-hand side. I'll name the team members. You've got Preeti, Jazz, Lena, Asta, Ajay, and Ankita. This team is building the story of build to rent. When we buy a property, we could quickly do something, sell it, and make a quick profit. In my view, that's a transaction. A transaction is something we quickly do, make profit, happy days, we all go home. Build to rent is a story in the sense that we buy a piece of land. We build it because we want to build it the way we want to build it. We build it with the motive that we'll be renting it out. So it's not something that you quickly do and come out. Where you build, you live with the problems of what you build because you'll rent them out. You will live with them. So you build them right. For the next 10, 15, 20 years, there'll be no maintenance issues. And that's the thought process that should go into it. And that's why you build it. Mm-hmm. Yeah. The big thing about this is the hard work that goes into building a project like this. Like we got this project on the screen, which is, you see the first one, which I would annotate here. This is a development of 19 flats that we just finished in Sudbury. We have built it from scratch. It was a piece of land before. And I'll spend time on another project later on. But we know exactly what's gone into the foundation, exactly what's gone into the roof, the bricks, and everywhere. That means we can manage it, support it, and it's an income generating asset for the rest of the life. Typically, a house or a flat is there for 150 or 200 years even. Typically, human beings, if you look at how long we invest for 20, 30 years, 40 years maximum. This is a legacy that's there forever because it will keep returning returns.
Yeah. So if I just ask there, in terms of give people an idea of the size of your business, I mean, assets under management, can you give us any idea? Are you happy to give us some idea as to that figure, if you don't mind? Or
absolutely, David. So we have 25 million asset under management. All these assets are predominantly built by us. That's where we are as a business. We have a team in London which supports the business, the project management, etc. We have a team overseas as well, which does all the other operational processes we have successfully outsourced.
Mm-hmm. Brilliant. Okay, and people will be able to go on your obviously your website and see other projects that you've done, which is really good. So you've covered why build to rent, which is great. So in terms of your actual strategy, then I was always intrigued when I hear people mention strategy, because some people just have a buzzword and others maybe understand it and actually have a very clearly thought out strategy. And obviously you're one of the latter, and you have this very clear diagram. So again, do you want to just explain the strategy, and John may have a follow-up question to that?
Yeah, absolutely. And David, that's a good question about what is the strategy. The strategy is the thought process that we will build this story. There's a young team. Hopefully one day I'll be able to retire and get out of this, and the team will take over this and keep growing. We have added a few chapters in this story as a team. All the members are adding their chapters in the whole story. And the thought process is that by the time I'll retire, we'll probably be at 1,000 flats, 1,000 units that we would own, and the story will carry on.
Excellent. And you have a clear, sort of acquire, construct, right through to the fundraising strategy for that, and the holding of the asset. So I know, John, you like your strategies and people with well thought out plans. Any comments or follow-up questions on AJ's strategy?
Well, I mean, a build-to-rent strategy or build-to-rent business is a yield-based business, and it's focused on acquiring assets that you want to own for a very long time. So locations really matter. As AJ said, you also will be more prone to putting in certain features or certain materials that wear well, that last a long time, that make it easy to get access to do maintenance. Maybe it's impregnated materials on the outside, so you don't have to put up scaffolding to paint. You pay that a little extra to have a higher quality finish, maybe in the wet areas in the house or the home, so that the tenants can have a good experience, but you don't have water damage. So it's a very different attitude to the people who are doing sort of the flash builds so they can sell it off and move on to the next one. It's capital intensive though, because it ties up capital and you get this long-term growth. And I can see that's why Vijay is looking at other ways of fundraising, because you want to have complementary investors that are happy to earn that income and build and take advantage of that yield.
Yeah. So AJ, in terms of COVID then, so obviously you've already alluded to the fact that you take a long-term view, which I think is excellent, but how did COVID impact the business, and either in a negative way or a positive way, even just a couple of takeaways for people in terms of education?
Absolutely, David. And COVID impacted everybody. Every business, every individual was impacted, and I would say we as a business were impacted as well. There was a lot of challenges, and I'll give you examples, like you could not find basic building materials like cement. You could not get surveyors to come around and do a survey on a completed development. I had to get a surveyor coming from Birmingham to do a survey for a property in Surrey. And the guy was like, look, I've driven like 200 miles just to do a survey. And normally I do surveys within like 10 miles from my home. So it had challenges. But having all those challenges, it's a bit like, this is one of my favorite ones. What doesn't kill you makes you stronger. Mm-hmm. Yeah, so we had our networks of surveyors, we had our networks of suppliers, builders, tradespeople who would normally work with us, and we were happy working with them. It's a long-term relationship. But COVID came and a lot of those people were not available. And we had to find new people who would help us. And guess what? Now those new people are part of our networks. Those new people are here with us even after COVID, and they would help us when we would need them. So in a way, it helped us to grow our network. There were challenges. It tested the strength of the team. I mean, normally we're like, okay, yeah, let's just order this material. And people come back and say, oh, there's no cement in Selco. That's a challenge. Is that even plausible that there's no cement in Selco? But yeah, there were challenges. We dealt with them. We emerged out stronger. We understood the value of tenants. We understood the value of how things work out. We understood their pain. They understood our pain. In a way, it brought people together, as problems normally do.
Yeah, excellent. Okay, that's really good. I think some really good points you've made there. Again, from someone who is in the middle of it. I sometimes joke with John that we do the questioning and asking people, but it's always great to hear from people who actually experienced it, had it impact their business in a real way. and that's why we love to have these guests on the broadcast. So thank you for that. Then just finishing off, then plans for the future. Are you able to share? Obviously you're looking out to 2022. What are your sort of high level plans for this year?
The plans for this year, David, are pretty much the same as the plans for last year. We'll keep looking for sites, we'll keep looking for investments, we'll keep looking for growth.
Okay, just simple and clear and easy to follow. That sounds like a good strategy and plan. So delighted, obviously, that we have been working on a project that is currently still coming soon. So for the attendees, this hasn't as yet been fully signed off as an approved raise. So just making that point, so you can't go and invest, and you can't log in and download the offer document yet. That is all still being reviewed and prepared. But in terms of what information we can share, this is a project, AJ, that you've obviously been working on. Do you want to just explain briefly this BACONTREE Avenue project and what we're hoping to achieve with the raise?
Yep, absolutely, David, and thank you for this. So I'll build on the thing that I said earlier. This is a beautiful story to be told. I mean, let's look at this building on the top. This is what it was when we got it. It's actually on a high street in Dagenham, disused building, and look what we've done with it. This is a good success. There's 9 apartments in here, all fully privately rented out. There's a commercial unit rented out on a long lease. This is generating a very good return. So in a way, it's good for us. It's good for the locality. It's good for the council. It's a win-win-win, and it's a win for anybody who would invest in this, because we know this is the return we can deliver from this. Mm-hmm. And this is what I mean by the story. This has been in the shape, this building has been in the shape for a good part of 15 years. And now I'm proud to say it'll be in this shape for the next, God knows how many years, 50 years, 100 years. Mm-hmm. This property has got roof gardens. And I was very pleased to go there last time in winter, and somebody was having a winter barbecue. Now imagine what has happened. This property has got solar panels, which means all the areas, the communal areas, are illuminated in the night, throughout the night, through solar panels. Mm-hmm. This property has got sustainable urban drainage system, which means all the water, rainfall water that comes in is used to water the gardens on the roof and around the property. Now, look at this and look at the transformation this has achieved and the returns this can do. Obviously, the funds that would come from this means an assured return from an investor's perspective. This is not a project where there's construction risk. This is a done deal. You can go there, see it, touch it, feel it, talk to the tenants, and see the delivery that has happened. And the success speaks for itself.
Yeah, I think that's a really important point, that this, just to be really clear, because a lot of the projects we bring on are development projects where you're starting from scratch. This BACONTREE Avenue has already been built. It's already been tenanted. AJ has supplied the full sort of rental income over the last number of years, and of course all the details about the purchase and construction. So that has all been supplied, but it is a commercial ground floor unit, 9 apartments, and the plan is, when the raise is approved, the intention is that he will literally sell shares in the SPV that owns this asset, and then there'll be a rental share paid out on a quarterly basis. So this is very much an income type project. And I know, John, the whole difference between a sort of development then versus an income, it's a different type of investor sometimes, or someone who wants to diversify their portfolio. And there's something to be said for an income type product that brings in money, through rental share, rather than waiting for maybe 2 years for the development profit.
I mean, you're right. It's an income asset or income opportunity. It's not a capital appreciation play. And there are definitely investors out there. In fact, a lot of investors out there who are very happy to receive an income stream on a multi-year basis. And whether 12% is good enough for them is for them to personally decide. but 12% is actually a significant income stream for investment.
So AJ, I'll give you the last word here before we wrap up the webinar today in terms of this project. The next steps will be when it gets approval, there'll be a project webinar, and you'll be able to come on and we can really deep dive in 45 minutes into the whole project. So is there anything you want to just finish with by way of this project?
Yep, definitely. John, just one thing I wanted to add to what you said. There will be capital depreciation as well. And let me explain you why. The construction cost has gone up by 25%. Eventually, all of this would start showing in the valuations that we would get from the properties. So yes, this will have some capital depreciation in the period for which this share option will be floated. I think apart from that, David, thank you very much for the opportunity.
Fantastic. I look forward to getting the information out via the equity offer document and via our project webinar. And all things being equal, we intend to be live our view deal next week and possibly live the week after that, but you can stay in touch with our updates. And if anyone based on today, sort of this is something that you definitely like, reach out to Dal. So Dal at LEOcrowdfunding.com, and you can certainly express your interest that you want more information on this as and when it goes view deal. So thank you very much, AJ, for being here. Really appreciate that. And that really just leads us to wrap up. We've taken the first step into 2022, and now we head on into the whatever's beyond the glare of the sun in the journey for us all this year. So delighted everyone could join us. And if anyone does need to reach out to us, there's our normal details. And John, anything you want to finish off with?
I'm all good. I think one little minor tip. Anyone who registers on the site, if you want to hear about upcoming deals, do not check the box saying you don't want to hear marketing messages because you won't get announcements. So if you're interested in hearing about future deals, leave the box checked so that you can receive marketing information. Some friends of mine they said, how come I missed the investments? Like, well, because you said you didn't want to be told. So what do you want?
Yeah, that's a really good point. So next week at 10 o'clock, we're going to be joined by Tina, and we're going to be talking about the payback on the West Buildings project. So join us again next week. And of course, you can this will be uploaded on YouTube within about half an hour. So listen, have a great rest of Thursday and weekend, and hope to see you again 10 a.m. next week for our weekly broadcast. Thanks, everyone. All the best. Bye-bye.
Thank you.